Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody is having a great week. We have Microsoft earnings and Google earnings coming out shortly. Some of you guys may be watching that. So, all right, welcome everybody. Let's get right into it. I was with you guys on Friday. I kind of made the case for a bullish, market with the dollar peaking, bonds possibly coming into a capitulatory low. So far, that seems to have played out thus far. I mean, are we out of the woods for the markets? I don't think so, but at least, it's a start. We are coming out of the worst seasonal patterns, as I mentioned. So we've got a little bit of a tailwind in the fact that rates really were calm today. So, where are we at? Actually, I just got off with my members, and in terms of the S&P, clearly, we had that resistance level around 38.25. We broke that clearly. There's still a bunch of levels here. The one level I'm looking at that I would even contemplate shorting at this point is right around the 4,000 level. Okay. And obviously we have the earnings tonight with Microsoft. Any kind of disappointment there probably pulls back. Obviously is going to pull back the market. And then we have Apple and Amazon on Thursday. So we got all kinds of market moving earnings. These are big mega cap constituent. Between those four, by the way, it's about 25% of the index. So it's going to be very, very impactful. Going forward, so let me pause here a little bit. Again, if you guys want to sign up to my newsletter, I have a class coming up, by the way, on Thursday at 11 Pacific. So if you want to sign up for that, we're going to talk about emotions on the chart. How do you spot those? What do those look like? I do talk a lot about market sentiment, emotion, and being a contrarian, right? And notice again, I was talking in the last couple of weeks how everybody and their brother was telling you how the market was going to crash, and everybody, this and that, whatever. And now that sentiment is starting to cool off. So, watching the VIX, if it comes down hard, let's say we have a really strong rally going into year end, watch the VIX below 20 again, because that could be a signal that the market's kind of peaking. I don't think we're out of the woods yet entirely. Again, until rates calm down, until we actually get inflation under control and the Fed stops raising, we're still going to have these big wide swings in the market. So we are coming in long TQQQ, as I mentioned on Friday. We put that on. We're also coming in long Dollar Tree stock. We're coming in long UNG. I think I mentioned UNG to you guys. We got in on that 17.48. It closed at 20. So we did, pat myself on the back on that one. It looks like we nailed the low on the UNG. Again, doesn't always happen that way. So we had a really good day at TTS. Again, doesn't mean anything, obviously, but so our members did really, really well today with all our trading. In fact, it was probably anywhere between $1,000 to $1,500 a day today. No guarantees, obviously, that will continue and so forth. So if you want to join me for 5 days, again, go to the link below. By the way, the morning sessions are you're getting all the levels, all the picks and whatever. And I did run a promo. That's over. If you signed up, great. I had a really good response to that. Just kind of we call it the essential. That's over and done with. If you just all you want is just the picks, you don't want any of the other stuff. So, but in any event, I want to thank everybody that signed up for that. I got a really, really tremendous response on that. So that's over. But I will be running some more promos and sign up for the class as well. Okay. All right. So where do we go from here? Well, again, we have, if you want to look at some levels, the first level on the S&P would be around the 1350 area. Okay. That would be the first situation there on the S&P. The fact that we're rallying now, as we know, once we get a rally going, then what happens is as we move higher, and especially if we move sharply higher, what tends to happen is we leave some really high quality accumulation areas or buy points, right? So that's also happening. We do have some buy points coming back down around the 3,800 breakout point. So that would be an area if you want to get long on the S&P. That would be something that is worthy of looking at. Okay. On the NASDAQ is the laggard still. And the reason I mean it's the laggard because the NASDAQ, unlike the S&P and the Russell, was not able to break above the recent highs here. So if you look at your charts, if you guys are watching the charts with me and pull up a daily chart, the NASDAQ is having a little bit of a challenge getting past that 11,800 level, which happens to be the peak from September, from this month actually, right? We attempted that rally and then failed, and it seems I think actually coming out, the earnings are actually on. So Alphabet is I think may have missed. I'm not sure, but just watching the futures market, I think Alphabet may have missed. So and you can see the pullback, and it's pulling back right from the resistance level. So but again, we had the biggest move in the NASDAQ today because of interest rates, and now we're having the biggest pullback as well a little bit right now. So we'll see how that pans out tonight. I really don't. I mean, if you look at the chart of the NASDAQ, all it is, it has some resistance now. We still got to get past that, and then there's a buy zone way below down in here that I'm looking at about 11,105, 11,100 area. So that's the buy zone on the NASDAQ. Now, the Russell, that's one I as you guys know, I've been talking. By the way, can you type in the chat if you can see me and hear me okay? So I know that I'm not getting any kind of, I think we're good on the issues I had for the last couple of weeks or so. Hey, Ryan, how you doing? Yeah, you're doing good on UNG, huh? Good for you. Yeah, if you got in where we put the trade out, I think you're up pretty nicely on that. Yep. So okay. So on I'm actually a lot more interested in buying the Russell. The Russell again is the stronger of all the markets. So there is a pullback area I'm going to be looking at in the Russell, roughly around the 1760 area or so. Well, yeah, of course. Yeah, if you wanted to risk, $800 on that level, actually it was like a $2,000 level on the same level, Ryan. So there you go. You're right. Coulda, woulda, shoulda, right? It does. It's tracking pretty good. There because again there is some little bit of a what we call convexity because of the futures contracts involved. But I mean, if you put them side by side, they're tracking pretty good, right? So you're not, again, it's the slow horse in that race, right? So you can't expect, but again, it's a much lower risk as well. So, anyways, listen, okay, so we've got this pullback area, and then on the Russell, there's a really nice level also above on the Russell near the 1875 level that I would be interested possibly in shorting the Russell. Okay, so those are the levels on the equity products. All told, again, we've made some really nice headway, and again, the questions coming up like it has been. it came up as we were rallying in June. It came up a little bit in August. It's starting to, kind of bubble to the surface again. This whole notion of, did we put in the lows for the year? Is this the bottom? Blah, blah, blah. Is this still a bear market rally and all that? I would tell you that, again, this is why I don't like labels, because if you were kind of locked into that whole mindset of it's a bear market rally, or I just need to be shorting and whatever, again, what happened in June, you're going to miss a tremendous rally regardless. So I've been talking to my members, kind of tempering that kind of attitude and saying, we're going to get long. And if the S&P rallies 500 points, we'll take it. And then we'll go and reposition short, as opposed to all this other stuff where, you get locked into, oh, it's a bear market rally, I should be shorting this and that. And again, a lot of the shorts, in fact, we were short the NASDAQ Monday, coming into Sunday, went 2x in our favor and then came right back. So that's, I don't have any qualms about shorting, as long as it's as long as we short at a high price. That's really what I'm looking at, right? And when we buy, just like nat gas, a lot of people would shy away from buying nat gas because of the trend and all that, but that's, trends don't last forever, right? So you gotta, if you can start figuring out where the trend's going to change, that's going to give you the lowest risk, highest probability trades. So, okay. All right. So, again, with more earnings coming, with next week, the Fed, we got an ECB meeting. Let's get into the dollar, because that's really important, right? Hey, JT. So, I've been talking about the peaking dollar. I think I made the case. If you haven't watched Friday's YouTube, I was literally making the case for, a bond capitulation, dollar peaking, and stocks rallying. And if you go check it out. We did break down the dollar finally, right? 112, it broke. We got one more on the dollar index, DXY. We got one more area to look at to confirm that perhaps this is the peak in the dollar. That would be around the 110 level. That was the last pivot low, right? And I think that if we can break through that, then that would actually add to the confirmation, because now if you think about the prior, we had that first initial high, 1468. We had that second high, actually twice. We hit about 1340, which is lower than the prior high. And now we're, kind of starting to break down. So we'll see. All predicated on the bond market, really. What's driving the dollar is rates. And so that's really what it is. Now, if you looked at the euro, all across the currency spectrum, you'll see that every currency rallied. This is, if indeed this is, and I do believe we are probably peaking in the dollar, this is going to set up from some really great trading opportunities in the currencies. I'm still looking at that. And particularly, we got the ECB, we got Canada tomorrow, Bank of Canada at 7 tomorrow. So that should move the Canadian dollar. We have the ECB 5:15 Thursday. And then we have the Bank of Japan later that night. So what happened, I think somebody asked me about the Japanese yen on Friday. I watched the video and I didn't catch the question, but there were rumors last week that the Bank of Japan had intervened, which they clearly did, but they never confirmed it. Now, here's the thing. Coming up Thursday, late Thursday, and the thing with Bank of Japan is they never actually tell you when they're going to announce. They're very cryptic. So, we'll wake up Friday morning and then the information will be out. But there are lots of rumors now swirling that they will actually start raising rates, which they haven't done in like literally 30 years. They've been at zero rates for, as you know, literally since the 90s. And so that could be a tremendous sea change, if you will, seismic sea change in the Japanese yen. So that is going to be, if you guys want to put something on your radar, that would be something. I know I'm going to be looking at it. We got a lot of whippy action. And one of the things I've been warning people about is if you short the yen, be careful, because that's when generally the Bank of Japan will intervene. So that's something to look at. That's notable, obviously, right? That probably won't happen till in the wee hours of Thursday, right? And so if you're not going to be awake or whatever, and there aren't really that many levels, you can look at the chart of the yen right now. You can see there are lots of whippy action. So until some levels really develop, or we rally all the way up to 73, which is the next quality distribution to short the yen, I would probably stay away. And if it is indeed going to have a positive reaction to raising rates and whatever, which it should, then we'll have new levels forming in that, because we did have that in June, if you recall, right? The yen had a really tremendous rally from May to June, July. In fact, we participated in some of that. So that would be on the currency front. That would be something to look at. Very important. Let's talk about bonds. So I did mention again, I did mention that it looked to me like the 30-year, just the angle of the descent, the kind of velocity of the move down, felt to me like that was a capitulatory type low. We made a low on the 30-year of 117, and we've rallied all the way back up to 120. TLT, which is what I typically trade here, and I will be setting up some trades in TLT coming up because TLT gives us a little bit better risk profile. I mean, there's some levels on the. I think I've been mentioning the 2-year and the 5-year that are reasonable. So I am going to be positioning our members in either or some of this stuff. The lowest risk situation for the bond market to trade is the TLT via options. So that I may actually spread that out between those two. Okay, but TLT came down to 91. Boy, that overshot. Remember, I kept talking about 100. Man, that way overshot. And by the way, it's sitting at some monthly levels. If you look at the TLT, came right down to where it was back in 05, 06, this 90, 91. All you got to do is look at your monthly chart of TLT. You can clearly see that. Seems to be just a major support area. It actually bottomed here. It spent almost 4 years just bouncing around this 92 area in the TLT. So it's a very critical level. But again, the angle of the descent, the velocity, the pace of the move, at least we get a bounce up to, I would say in the near term, we're probably likely to bounce up into the 100s to 105 area just in the short term. And that's worth a trade, okay, on the TLT. And on the and then moving over to the actual bond futures, there are some really nice levels on the. I'm actually watching the. I think I mentioned this the other day. The 2-year has to get above 102.18.8. There's some major resistance. In fact, we poked through that earlier today, and then came right back down. So we'll see. We'll see. And I think the 2-year is really worth watching, because if the thing cannot hold and get some kind of movement to the upside, that will actually be a headwind, particularly for the NASDAQ. Okay, so you need to be watchful of that and see. Yeah, so we're getting a mixed bag on the earnings. Looks like Microsoft beat and Google. So we are getting some pullback in the futures. We're getting a little bit of a pullback in the S&P right now. So not anything unusual, as we know. Okay. All right. Let's see. So that takes care of that. So we covered the equities, we covered the bonds. Gold, and gold is going to be also, gold has a really nice level. We got to get above 1670 on gold. Generally just kind of chopping around. Similar on silver. Silver still looks better to me. Really, I'd like to see it below 18 for me to get interested in silver. All right, let's get into oil. Oil is basically forming a range. If you look at your chart, look at your 4-hour or daily chart, 87 to 83 is essentially your level on oil. And we got an OPEC meeting next week, but right now it looks like it's settling into a big range here, 83 to 87. In fact, if you want to trade that range, it's very, very clearly seen on the charts. The only problem with trading these ranges against these pivots is putting a stop in is a bit of a challenge, right? Trading the actual futures contracts, as you know. But we'll see. Now, in regards to XLE, I still want to buy XLE on the pullback, but it's getting really extended. And in fact, it was the underperformer today. And it is approaching a very key level on XLE. So I'll be, again, I have no qualms about shorting XLE. If it gets up into the, I'll actually show you XLE again, the ETF that tracks the big oil stocks. Chevron, Exxon are the two biggest pieces there. If we get up around, if you look at your chart, we peaked at 93 roughly and crashed. By the way, that was back in June, and then we came crashing down all the way to 64. And we've had this before. We came all the way up to 85 and then came all the way back to 68. So again, this is the counter stock market almost right now. So when it gets really crowded, they take it down really hard. So I'm going to be looking to possibly look to buy some puts on XLE in the next several days or so, depending on where oil goes and so forth. We just talked about nat gas. Nat gas did bottom at 5, which was a key level I've been talking about. So that translates into that. Part of the reason why we took the UNG. And by the way, question I got the other day is, why didn't you buy options on UNG? Why did you actually buy shares of UNG, right? Well, the options are very, the volatility on UNG options is is almost 100. And so one of the things that you have to learn about options is when the implied volatility is that high, it's going to be rough for you to make any money, because you're paying a large part of the premium in an option when you have that high of implied volatility is going to cost you, and therefore what that does is it also makes it tougher to make money because even if you buy them deep in the money and you've got all this volatility embedded in the option. You still can make some money, but it's going to get a lot tougher. And you can see that when you pull up the options. You can see that, in the money options are like $2-3. And that becomes a bit of a challenge. So I've been talking to that with my members, and we opted to go with the shares rather than the options, simply for that reason. If you want to learn again more about options, I am probably going to hold another class on options related to implied volatility in the next couple of weeks. Okay. And then grains, not a lot to do in grains. There's not a whole heck of a lot. The only thing I would tell you is that watch the grain markets in terms of rollover. Also, nat gas is rolled over into the December contract, and some of the grain markets are starting to roll over. But there's not anything. If you just look at your grain, corn is kind of chopping around in a messy, let's call it messy range. Similar with soybeans, and we're just going to have to be patient with that and wait for them to break out. But other than that, really looks like there was a little bit of a miss or a mixed bag on the earnings front. But that's one set of earnings. We've got Apple and Amazon on Thursday, and all kind of stuff. We've got. By the way, we got PCE numbers also on Friday before I get out of here. That could be also impactful. That's another inflation number that the Fed looks at. So by no means are we out of the woods where the market's just going to scream higher. We still have all kinds of, as you know, all kinds of potential landmines here with inflation, with what's going on in China, and so on and so forth. But for the moment, I still think that the market still has a little bit of upside. But it doesn't matter. That's why you use stops and size down and all that good stuff. Okay. So I think that's going to do it. Any closing parting shots here from you guys? Any questions before I get out of here? Again, just quick reminder: I have the class coming up. Make sure you guys give me a thumbs up. Tell people about the channel so I can grow the channel. Put some comments on the bottom there, and if you want to join me for 5 free days, also, so all that good stuff. And if not, I will bid you adieu. Have a great rest of your week. Again, we got all kinds of stuff coming up. Still expect, lots of the same volatility. And I'll see you guys on Friday. Okay. Take care, everybody. Have a great rest of your week. Stay safe out there.